Market conditions majority bullish, 14-0 on S&P 500. We're seeing futures up slightly as of right now, almost back to all-time highs as of a couple of days ago here. We know that we're really extended in this trend to the upside at the later stages of this current trend. Retracement locations would be looking for that 6,600 range, the top end of this demand block, and the bottom end of that demand block is going to be about that 5,500 range. All the way back to the 236 is going to be 63.30. So we've got this entire range from where we're at currently all the way back to that 6,400 area roughly for still bullish playground. So we still could retrace to those levels and still be in an overall uptrend. So and that could take some time. We could see a retracement, a pullback, find some support, and then ultimately more upside. But the extension of this trend is currently getting mature. Let's take a look at the breadth of the market. We're seeing the number of stocks above the 50-day moving average pulling back to 56%, almost 57% right there. A majority bearish. We saw that tick back up to 14 bullish and 0 bearish yesterday, and then it's moving right back again. And as I mentioned before, when it's really compressed as it's trying to decide the trend, and with these sideways oscillators where there's just a top and a bottom, we get a lot of volatility here, but it's still at a decision point. It's still at that compression where it's going to decide which way to move. So now we're seeing another little move back to the downside here as well. We're seeing VIX relatively flat. It's holding at 1627 this morning, has yet to break back up above that 17. It's been flirting with it, but really tight volatility right here as well, with just a little bit of a bearish tone, but working its way back bullish right here. We were 7 and 7 yesterday, so that's pulling back just a little bit. S&P 500 majority bullish at 14 and 14 on the daily time frame. That pullback location to 6,600 as we mentioned. Dow Jones Industrial Average, we're seeing that at 14 and 14. Also all-time highs. Retracement location 458. Around that 460 range roughly on DIA. Triple Qs currently at 609, so it looks like it's going to gap pre-market up to all-time highs here as well. Retracement location back to that 585 range. Small cap names also continuing to outperform here nicely. IWM is Russell 2000, and it's also finding the demand on that pullback, pushing into these new all-time highs. Take a look at USO, which is the ETF for oil, seeing it play with that 50% retracement range. We talked about that. It had broken down through it. Didn't, look like it may want to test that 69 range, and still may do so, but it's pulled back up the last couple of days. Still have majority bearish on oil. Gold gapping to all-time highs again this morning, and the daily time frame well extended, connecting this swing low. Let's connect one of these swing lows right here and see what that current trend location is looking like. We've got 349 on a pullback for GLD. That weekly time frame, this is nice perspective to kind of keep yourself in check of what of where we're at. This is crazy expansion right here, and just doesn't last. It's not sustainable, but it can certainly go higher before we get some kind of reversal. This is turning into potential meltdown scenario where we get these moves that move straight up, and we could get a move back down. Meltdown somewhere. It may not be in gold, it may be in equities, it may be in bonds. We're seeing bonds also starting to move back to the upside a little bit. That the rates moving back to the upside or holding these lows. That means that bonds are selling off, are moving lower when rates are moving higher. That's one of the concerns that's being discussed out there, is the kind of the state of the U.S. credit quality, U.S. credit worthiness based on the amount of debt that we have. If there is risk in that and we get bond selling. If we get bond selling, we're going to see interest rates spiking. Okay, so keep an eye on those two things when we're seeing the 2-year and the 10-year both finding some support right here and working their way back to the upside. So we're gradually climbing. This is kind of turning into a little bottoming pattern, and if bonds are selling off and rates are going higher, that could also create a problem for the economy. So those are really kind of the potential things to be watching for. We're still dealing with inflation, dealing with unemployment, dealing with questions of whether we're, what's the economy and the strength of the economy. Let's keep an eye on the bond market here as well. If we start to see rates start to climb, and even if we were to go over and just take a look at TLT, that could give us an idea of the bond pattern as well. So this is the bond price versus the yield price, and so we're seeing bonds, the price of bonds moving higher, kind of bottoming out here and moving back up again. So that, as we see that, we're going to see interest rates, bonds are selling off. We see those bonds continue to the downside, and we see interest rates continue to climb. So it's actually, in this case, this price pattern right here on TLT, not quite exact to the rate, but keep an eye on those as well. We'll keep an eye on this rate range to see if we're getting any push to the upside. A couple stock ideas to consider today. We've got YMM, which is a nice confirmation bar here, up above 1317, continuation. Also seeing a nice pattern on CLD, which has got a confirmation bar moving in back into momentum and above the 236 area here as well. If that loads in, there it comes. That'll do it for today's update. Everyone, have a fantastic day today.